Good evening and welcome to a brand new show of Markets Tomorrow. A disappointing day for Indian markets which clearly failed to capitalize on strong global cues. After an okay start, benchmark indices turned volatile. We saw a lot of back and forth movement in high beta stocks and banking stocks. They managed to bounce back in the second half of the trade. So what are the key monitorables for the rest of the week, and which are some of the important cues which one should focus on when it comes to tomorrow's trade? We will discuss that and much more for you in this edition of Markets Tomorrow. But before that, here's a look at some voices and some faces who would be joining us on the show today. We've got Anil Singhvi of ICAN Investment Advisors. Amrish Balega will join us with his fundamental take, and we'll connect with Sandeep Wagle, Managing Director of Aptat Technical Advisory, to understand the technical setup. Before I start the panel discussion and bring my live market guest on board, here's a look at how things shaped up for Indian markets for the day gone by. Nifty has once again cracked, and it has cracked this time convincingly below 6,000. Auto stocks have been in demand, and auto stocks were in demand today after CLSA and Credit Suisse. They both upgraded their price target for Tata Motors. There was late surge in OMC stocks. Markets now are confident that government is doing, government will take some positive steps to mend the subsidy problem. In terms of theme, the top traded counter today was Suzlon, at least on the National Stock Exchange. State Bank of India is on a tear, and that stock is up for the third day on the trot now. Nifty gainers, apart from State Bank of India, there was price action and volume action in GAIL and BPCL. Cement stocks had an okay day. Railway fares have gone up. They will go up rather from 31st of Jan. That will have an impact on cement and steel companies. Steel stocks were weak, and cement stocks also saw some mild profit booking. The game in the town today was autos across the board. Auto stocks were on some tear. Oil marketing stocks, like we discussed, they were looking okay. Railway fares have gone up. For sure, that is good news if you are a railway ancillary supplier. Tesmaco, Kalindi Rail, and Kernex Micro, a couple of railway-related companies, those stocks had a strong day. If you look at Kalindi Rail or Kernex Micro, all of them appreciated in the second half of the trade. The minute markets realized that railway fares will go up. So what's the way forward for Indian markets from these levels, and how should one read into today's late selling in indices and today's late rally in the Bank Nifty? Sandeep Wagle, let me kick off the discussion with you. This week we've seen both back and forth movement. Monday Nifty cracked below 6,000. Tuesday we closed above 6,000, and today we've come convincingly below 6,000.
Well, Nikunj, I would say that this is a mild correction. I'm using the word mild because I don't see the correction extend beyond 40, 50, maybe even 60 points beyond that. I mean, possibly 5,900 can be tested, which is 50, 60 points below. I don't think that will break, and we will go down to 57, 57, 50, because if 59 is broken, then I will have to talk of a corrective move, which can go down to possibly even lower than 58. But as of now, I don't think so. The kind of patterns that are on the charts are suggesting that there will be more stock-specific movements, and 5,900 will be held on to, at least on a closing basis. However, on the upside, I don't see strength which will take the Nifty beyond 6030, 6040. So broadly, 59 to 6040, 6050 is what I would map the Nifty at.
Amrish, what is your sense? Do you think in the near-term benchmark indices have hit some kind of a stumbling block? The downside may not be large, but the upside surely is restricted?
Upside for the time being, I think, is restricted to about 6,030, 6,050. But at the same time, I'm not very perturbed the way the market has come down. I really don't see the markets going much below 59.40, 59.50. So I think we'll be in this range possibly for a couple of days, and then after that we should see a breakout, because the flows should continue to be good. Domestic investors will surely come in, and I think the results which will come out, other than IT, should be good to profit the markets. So clearly, I look at markets possibly at levels of about 6,100, 6,150 in possibly about 10 days.
Anil Singhvi, let me also encourage you to join in the discussion. And I know, Anil, you are of the view that the current rally will not sustain. But if I map all the cues, things are looking quite constructive. Reserve Bank of India will cut rates. Earnings have bottomed out. There is abundant global liquidity, and government reforms have kicked in. So at a time when it makes sense to be a buyer, Why are you still exercising caution?
We have got $25 billion of money, right? And it's still your rupees 55. It is showing you something that things are not very well. In fact, it's so reactive when we say that people are importing gold, so gold duty should be increased, and that's will be our one cure for current account deficit. I think that shows to very large extent bankruptcy of ideas. And that's where my problem is, that today we are really going for very short-term situations and short-term solutions for long-term ills, and which is really not going to help. If you look at fundamentally all factors put together, it does not give you that corporate earnings are also going to be much better and we are bottoming out. I don't buy this that we are bottoming out on corporate earnings. From here on, we will have 20% growth. It doesn't look to me from any sector that there can be a 20% growth in bottom line. Sector, I'm saying. A company specific, yes, there would be some companies who will still post good results. So I'm looking at more at the broader markets. It does not give me that the market is going to get a 20% earning kicker.
Well, the big story today was autos. Credit Suisse, they have upgraded their price target for Tata Motors, and CLSA also, they have upgraded their price target for Tata Motors by a good solid 7 to 8%. Tata Motors today closed almost at the highest point of the day. That's the CLSA report. And now CLSA is making a case that Tata Motors will be able to, or the JLR business for Tata Motors could see some strong pickup in incoming quarters, as both Jaguar and Land Rover, they are due to launch new models. Credit Suisse also is making a similar case. They are also of the view that the Chinese luxury market has bottomed out, and at current levels, according to Credit Suisse, valuations for Tata Motors are not looking all that stretched. Amish Baliga, would you agree with Credit Suisse? Would you agree with CLSA?
Yes, surely to a very large extent. And despite the poor numbers which we have seen in the last 2 months, none of the auto stocks have really corrected, which shows that people are extremely positive on the way ahead. Tata Motors, I think China factor will really play out quite well over the next couple of months. So I also feel that this stock can move to levels of about 360, 370.
All right, gentlemen, stay with us. Let's take a quick break. But before that, we are leaving you with some FNO ideas for tomorrow morning.
Tata Steel has rallied from around 360 levels in December to around 430 levels in January. We think the stock should consolidate at these levels before moving on the either side. Also, the company's quarterly numbers would come out somewhere in first week of February. Hence, there are no big shocks expected from the stock. In this scenario, we recommend investors to sell one 480 strike call option of Tata Steel January series at around 65 paisa. This translates to around 650 rupees of earnings on a margin deployed of around 45,000 rupees. Stop loss in this trade is, if Tata Steel starts trading above 480, we would recommend investors to exit out of this position. 480 translates to around 13% from current price of around 428 at which the stock is trading right now.
On markets tomorrow, it's all about important cues for tomorrow. So tomorrow, what exactly could impact and influence your portfolio? Syntex is due to declare numbers tomorrow. Now, Syntex is not a market heavyweight, but it is a large liquid mid-cap stock. Last 2 or 3 quarters have been rather painful for Syntex Industries, but this time around, market may not confident that Syntex could come out with a decent set of numbers. It's all about autos. So do monitor autos as a pack, autos as a group. The big irritant is what domestic institutional investors are doing. They're still selling this market down. Now, bear in mind that the current quarter, which is Q4 or Q1 of a new calendar year, is always considered as the peak investment quarter for an insurance firm. The LICs and the GICs of the world, they get maximum inflows in this quarter. But this time around, it appears that the insurance inflows have been rather moderate. Nifty futures, the premium has come down, so it appears to me that the game is now shifting from Nifty futures to stock futures. So we are in a market where the trend is strong, the momentum clearly has shifted from Nifty 50 to individual stocks. So I guess it makes sense not to focus on the haystack, but focus on some of the sharp needles in the haystack. It's important to get the stock right rather than getting the sector right. In terms of a stock, Sandeep Agle, it really has to be Tata Motors. What a week it's been for Tata Motors.
Absolutely, Nikunj. We had a target of 330, which has come today. And after seeing the pattern today, I feel that there is some more in the offing to the tune of another 20-30 points, so 7, 8, 10% upside. As a trading buy, would be very comfortable buying in the range of 325 to 320, and a 310 can be a good stop loss. And I would ride the move till 350, 360, somewhere around that. But as an investment, I would like to wait. I don't want to talk of a 400 plus very soon. That may take time. 350, 360, it can move between 360, come back to 330, 320. So at that level, I think it will face some kind of a resistance. So 350 is what I would talk of.
Anil Singhvi, what are your thoughts on cement, a sector which you track with a magnifying glass?
Well, as I've said earlier also on your channel, that I still remain bullish on cement for two reasons. That A, the supply side of cement, which was really causing a lot of concern, has tapered off. I don't think we are seeing many cement plants coming up. And demand side is picking up, not the way one would have liked it, but definitely it has picked up reasonably well. Why second tier and third tier cement companies are really going up? Because if you see the gap between the valuations on EV per ton, ACC, Ambuja, Ultratech, they all are almost at $180 to $200. Replacement cost of a cement plant is about $125, $130. So all those mid-cap stock and small-cap stock which are trading at $40, $50, $60 obviously have a lot of catch-up to do. And that's where we are seeing this kind of a run coming in.
So within the mid-cap cement space, Anil, what exactly are you hot on?
No, I'm looking at EV per ton, so that is captured in that. So I'm not looking for the market cap, that they are very cheap on market cap. That has to be taken into consideration. But if you're looking at that good management, good size, and they're still trading at around $50, $60, they have a lot of catch up to do. Even Orient Cement actually may not be management as good or as efficient as Dalmia, but definitely once it is getting bifurcated from paper and cement, I think Orient Cement also will do
well. Amish, work hard. In last 2 or 3 days, work hard also is appreciated by a good solid 100 rupees. Do you think in the near term, the big move in work hard is now behind us?
Yeah, well, we have seen that move from 450 levels to the current levels, which has been a superb move in the last 1 year. So I think upside is quite limited from here. I really don't see the stock going up by more than 100, 150 rupees. I think it's time to look at other stocks.
Sandeep Agle, from the large cap space or from the Nifty 50 basket, apart from Tata Motors, State Bank of India also has been on some kind of a tear. In quick time, State Bank of India has appreciated by a good solid 200 rupees plus. And for a stock like, and 200 rupees for a stock like State Bank of India, I think that is a big number.
Nikunj, absolutely, I do agree with you. But when the stock has moved from 2300 to 2500 plus, the upside seems to be limited. Not to suggest that it is weak. The weekly pattern is still looking strong. It has managed to clear a lot of resistances on the way. But I think somewhere it would consolidate. I see the upside capped at 26, 26.30, which is another probably 100 points or so. I don't see SBI breaking that and going to 28, 29. So between 26 and 24, 50, 25 is where I see SBI spending some time consolidating over the next few days or possibly weeks.
Sandeep Agle, there are two stocks which were clear winners for the year 2012. Number one, I would say L&T, and number two was JP Associates. Now, both these stocks are off to a slow start this year.
In fact, L&T is suggesting that there can be some more downside. I mean, as a delivery, I would be comfortable selling in the range of 1580 to 1600, and I would look at 1400, 1420, those levels in case a corrective move comes. So L&T looks tired. I mean, I would sell it as a position trader also, maybe not as an F&O trader, but at every little bit of a bounce. I don't see L&T crossing 1620 on the upside. Downside, it can test 1440, 1420. So L&T, as far as I am concerned, is corrective. JP Associates, if it breaks 94, then I would talk of a move down to 86, 87. So one can sell it in FNO also if it breaks 94. But till such time, I would say 96 to 102 is the range in which JP Associate is locked in. I wouldn't buy it also at this point in time.
Anil, finally we have something to talk about apart from fiscal cliff and a possible fuel price hike. Infosys numbers are due on Friday. What are your expectations? Infosys has been a marked underperformer for 8 quarters in a row. Do you think the current decline in Infosys is a good buying is a good opportunity for a classic long-term investor?
I think the story of Infosys in terms of what it was as a play, as a one-stop play in Indian IT scenario, I think it has vacated that pole position, unfortunately, for a variety of reasons, and which is some of it's all known and well documented on that. So I don't think Infosys is really a play which you can again see that it can give you a return of 25-30% IRR for next couple of years. In fact, to my mind, if I look at the 3 biggies, TCS is a far better bet than Infosys and Wipro. So I would always put my money behind TCS if I have to choose a large IT play. But I would rather look at mid-cap IT plays, product companies which are doing far superior job than the biggies.
What exactly should one focus on for tomorrow morning? Let's discuss some stock ideas, and for that today let's start with Pranay.
Well, keep an eye on Strides Aqualab. The buzz has returned on the street that the entire promoter stake sale in the injectables business, which is Agila Specialties, is likely to happen very soon, and Pfizer continues to remain the front runner. Earlier, the reports had indicated that the deal could be valued at around $2 billion, and our sources close to the development tell us that the deal valuation is likely to be in this vicinity, and it is going to be at a significant premium to the sales. Also, Agila Specialties grew about 39% in the September quarter and contributed about 61% of the revenues of Strides Aqualab. On a fundamental level, Strides Aqualab analysts are really bullish on this stock. They expect about 40% growth in the top line, 75% EBITDA growth, as well as about 50% growth in adjusted net profits in the third quarter of 2013, which will largely be led by the high quality and high margin business of Agila Specialties.
Sandeep Aglia, what are your top ideas for tomorrow morning?
Nikunj, the way the markets gave way in the last half an hour, I would like to exercise some caution, so I am only restricting myself to 2 ideas. In this market, Havells, which we had a buy during the day, moved up, so I would buy it on a little bit of a declines with a stop loss of 664 and a target of 705. A 3-4-5% trading upside looks likely, maybe tomorrow or the next couple of days. And Gujarat Ambuja did show a lot of weakness at the end of the session, so I would want to sell it on a little bit of an up move. A stop loss of 200.50, target of 190.
Amish Balega, where are you putting your money to work? What are your big ideas for the year 2013? Where are you confident of a 20% appreciation? I'm keeping it conservative.
I'll give you one stock which is both a technical and a fundamental idea, Punj Lloyd, where we have seen an extremely good consolidation in the last, I think, 8-9 months between 46.48 and about 60.62. Just seen a breakout, and with the balance sheet getting repaired, order book position extremely good as of now, and they're looking at acquisitions, which shows that they're quite positive about the future. I think at these levels it could be bought with a target price of what, 82, 85.
What are the triggers for Punj Lloyd? Because I cannot see a single figure on the horizon.
Clearly, I think the order book position which was there, that itself, getting executed would be a big trigger for Punj going ahead.
Anil, what are your thoughts? Where do you think there is value in this market?
It's a very tough call, but I would put my bets onto mid-cap IT companies. I think the larger cap IT companies have had very good for last 10-12 years. It's now the mid-cap who have done really very well. It's like a Mindtree or a Hexaware or a Mastech. I think they all are going to do very well. And mind you, I'm still looking at it that rupee will remain under a lot of stress next 12 to 18 months. So I would not be surprised if in the forward, if they book their dollars at around 60 odd rupees, I think they're going to have huge upside onto their margins.
And before we wrap, let's go to Pranay for his second idea.
Well, the second company to watch out is HPCL, where a lot of analysts are bullish, primarily on the back of the oil ministry announcement, where it has indicated about diesel price hike of rupees 10 in a phased manner over 10 months. So this will help it cut the under recoveries. Also, that there is a positive stance gaining on this sector, where there is expectation of more deregulation, not only in diesel price hike, but also other proposals where indications could be raised on raising the prices of LPG as well as kerosene. That will help cut the under recoveries further. This company has been trading at lower valuations to the sector. It's about 9.5 times versus the sector average of about 12. That is why a lot of analysts are bullish, and Nomura has a buy rating on this with a target price of 380.
Okay, Pranay. Thank you for identifying two stocks, Sanil Singhvi, Sandeep Waglia, Amrish Paliga. Thank you all for being part of this edition of Markets Tomorrow. That's it on the show. I'm Nikunj Dalmia signing off. Thank you for watching this edition of Markets Tomorrow.